What's up guys, Jake here. If you've been following my channel for the last 12 months, you've heard me mention numerous times how excited I was to be getting out of the military and buying my first home. However, apparently it's just not meant to be right now, and in this video I want to explain what happened and why I was considering mortgage fraud. Now, to understand exactly what happened to me, you need to know that there are three kinds of conforming loans. There is VA, standing for Veterans Administration, FHA, which stands for Federal Housing Administration, and then a conventional loan. Probably 75% of people just go with a conventional loan, which means it's not government insured. But because I'm a veteran, I was trying to use a VA loan. And what is a conforming loan? It means that your mortgage lender has to meet certain criteria for you to qualify for the mortgage. And a mortgage underwriter is going to check to make sure that all this criteria has met. Who sets this criteria? It's the mortgage security companies, Freddie Mac, Fannie Mae, and Ginnie Mae. It doesn't matter if you go to a bank or a credit union or a national lender, they're all following the same guidelines put out by the mortgage security companies, because when you get a loan, a mortgage from a bank or a credit union, they immediately resell it as a security to the mortgage security companies. It becomes an investment product that, certain pensions or funds can buy as a form of investment. So for that reason, the government is very strict, very protective of these guidelines to prevent a repeat of the 2008-2009 housing collapse. And boy, are they rigid with these guidelines. Now, I'm a first-time home buyer, and I served in the military, so I would like to use a VA loan. I wasn't trying to do a conventional. However, if I have to do a conventional, I'll do a conventional. But I'd rather not. With a VA loan, there is a funding fee, but otherwise I don't have to put down a 20% down payment. If I wanted to buy a $400,000 house, 20% would be $80,000. I have the money for a 20% down payment, but I don't want to use it. Dave Ramsey is an idiot. When he tells his followers to pay off their mortgage as quickly as possible, over your lifetime, over his supporters' lifetime, he's costing them millions of dollars. If I had taken this $80,000 and put it towards a $400,000 mortgage, I'm only saving 3% a year on not having just borrowed the full $80,000. Whereas if I put that $80,000 to work in the market or investments, just buying and holding an S&P 500 index fund over the long run, over a 30-year period, over the long run, with dividends reinvested, I can expect to earn 10%. So what can this $80,000 earn me over a 30-year mortgage? Well, if my mortgage rate is only 3% and I can average 10% long-term over 30 years in the market, I'm net making 7% a year. So you can put in a compound interest calculator, $80,000 at growing at 7% a year over 30 years. That's what it costs you when you put money into your mortgage when you don't have to. So my preferred option was a VA loan. So I went on USAA's website to fill out their pre-mortgage application. And the first question, are you currently serving? Okay, well, it's a VA loan. That's a pretty good question. But then it asked me, are you separating in the next 12 months? And I remember thinking to myself, USAA, why do you want to know this? What does it matter if I'm separating in the next 12 months? I'm a veteran. I should be able to use my VA loan, right? So on the pre-mortgage application, there was a calendar drop down, and I am finally separating in February of 2022, but I might have selected 2023, just to avoid this potentially, I'm getting out of the military. Is this going to be a problem? Well, obviously I pre-qualified, and I was talking to the mortgage lender with USAA on the phone, and he asked me the direct question. So you are PCSing to Las Vegas, permanent change of station. He thought I was transferring to Nellis Air Force Base from Minot. And I replied, yes, I am moving to Las Vegas. That's not a lie. And he said, great, well, we're just going to need a copy of your orders when you get them to verify. And at this point I said, uncle, and I gave up. And I chose to ask this lender while I had him on the phone as many questions as I could to understand this whole VA loan process. And he didn't, as soon as he found out that I was getting out in the next 4 months, he basically told me I didn't qualify for a VA loan with USAA. Thank you very much. But I did get some useful information from him. And your mortgage lender is just trying to meet the guidelines put forward by the mortgage security companies. And what they do is they just have something called desktop underwriter, where your lender, doesn't matter if it's a bank, a credit union, whoever, is taking your information, putting it in the mortgage security company's software to see what you qualify or if you qualify. And they're basically the first screener before it gets to the underwriter, who is basically securing or verifying that these loans all meet the guidelines for the mortgage security companies. And the underwriter is looking for these 5 things: your credit score, your debt to income ratio, what is your down payments and assets, the home appraisal, is it fair value, and income and employment. You must be employed and you must have qualifying income. Otherwise, you're not going to qualify for a conforming loan. Doesn't matter if it's FHA, VA, or conventional. So straight up, the loan officer for USAA told me that I cannot use my military income to qualify for a mortgage if I'm leaving the service in the next 12 months. I'm a captain almost at the 6-year mark. With all of my pay and benefits combined, I'm making over $100,000 this year. Doesn't count. Can't use it. Will not qualify. And the loan processor, they ask for tax returns, bank statements, pay stubs. But if you're moving cities, like if I was just staying in Minot, they wouldn't ask for orders because it doesn't matter. But it's obvious to the underwriter what's happening if I'm in Minot, North Dakota, and I'm trying to move, for example, to Las Vegas, Nevada. Well, why are you moving there? Are you getting out or are you staying in? So it was at this point that I was feeling pretty nervous about my prospects of qualifying for a mortgage. Now, USAA works exclusively with military, and VA loans are exclusively with military. So I thought to myself, well, maybe I'm still good if I just go with a conventional loan. I don't work with USAA. At the time, I was looking to buy a house in Las Vegas, so I reached out to a real estate agent in Las Vegas. Her name is Kaori. She actually does have a YouTube channel. If you guys want to go there and subscribe to her channel and help her get to 1,000 subscribers, I'm sure she would greatly appreciate that. She does have some pretty cool videos on her channel of luxury home tours for houses in Las Vegas. If you like seeing these kind of fancy homes, they're pretty good videos. And she recommended to me that I speak to her preferred loan provider at a company called Loan Depot. Now, like we mentioned before, I don't want to put down a 20% down payment to avoid PMI with a conventional loan. However, I will do it to qualify and get a mortgage if I can just stop renting. So I went through the exact same pre-approval questionnaire on their website, and I got to the same question. Are you military? Uh-oh. Yes, I'm military. When is your expected date of separation? And once again, I might have fudged the number to say 2023 just to see how big of a deal it was. And sure enough, the screener approved me. I got to speak on the phone with the loan officer, and he asked me the question, so, you're transferring to Las Vegas, god damn it. And in my mind, I was exploring all my options to get around this barrier. Well, what if I just gave them my current orders? The last set of orders I have was to go from Vandenberg to Minot. What if I just gave them my Minot orders? Would they really scrutinize it that hard? And that's a pretty dumb thought. I'm sure the underwriter has seen military orders before and they would know the difference if they were orders not to Las Vegas where I'm trying to buy a home. My next thought was, well, what if I say I won't get my orders until January? If I'm separating officially in February, lots of military members don't get their orders until 30 or 60 days prior, but maybe they want to qualify for a mortgage and go house shopping 90 days or 4 months in advance. What do military members do in this scenario? And the answer to this is they have to get a letter from their commanding officer, their unit commander, saying that they're staying in and that they're PCSing to this city. So I thought, well, what are my odds of getting my flight commander to conspire with me to help me commit mortgage fraud? And obviously, I'm not going to do that, guys. But once again, mental exercise, just having the thought. So I finally confessed and admitted to this loan officer that I am in fact getting out. What does that mean? He asked me, do you have other qualifying income? Yes, I do, sir. I have this up-and-coming YouTube channel that's doing pretty well, about 68,000 subscribers. And he said, great, we can verify that with your last 2 years' worth of tax returns. The income you're getting from YouTube can count as qualifying income if we average your last 2 tax years for that source of income. And I said, what about this year? Can I use this year? I'm making a lot of money this year. And he said, nope, doesn't count. It's only the last 2 tax years after you've gotten your 1099 income statements that I get from Google, because Google owns YouTube. So this year doesn't count. As of filming this video today, I've made $67,000. I estimate, with another 2.5 months worth of YouTube AdSense, potentially I could get this up above 80,000, maybe potentially 90,000, depends on how good of a December I have. So yeah, this doesn't count. So I have to look at my income from 2019 and 2020 and average that. Well, my channel wasn't monetized in 2019, and I only made $23,600 in 2020 from YouTube AdSense. So my qualifying income from YouTube is only $11,500. Once again, they don't care how much money I'm making this year. So he told me, that's not great. Do you have anything else? And I said, well, yeah, I'm a pretty good investor. I have brokerage accounts now with Morgan Stanley, Fidelity, Robinhood, Schwab, Vanguard. I've got the government TSP. Altogether, my net worth is about $350,000. I have no debts, no consumer debt at all, car payments, credit cards, student loans, and amongst all my listed assets, $350,000. Does that help me at all? And nope, they weren't impressed. It doesn't help me at all qualify for a mortgage. I said, what about my credit score? You guys pulled my credit. My Experian is showing an 820. I took a screenshot here. Does this help me at all? And nope, doesn't matter. Can you get a letter of qualifying income? And this is where my brain really started turning. So apparently for service members getting out of the military, if they want to use the VA loan, they need to have a job lined up. And they have to get a letter of qualifying income from their future employer stating what their annual salary will be, what their position will be. And the mortgage underwriter is probably going to verify this. They're probably going to call your future employer to say, hey, is this document that was provided to me legit? Is this person actually going to be starting at your company? Will this actually be their annual salary? I don't have this. So I was thinking, well, what if I apply for a job in Las Vegas, maybe like a civilian job at Nellis Air Force Base, get this letter of qualifying income, qualify for the mortgage, buy the house, then immediately quit the job before I even start it. I just tell this civilian job at Nellis Air Force Base, I can't start until March. I buy the home in December. As soon as I bought the house, I close. I just quit the job before I start. And I don't really want to do that. I know how much of a headache it is to go through a hiring process, and I don't want to put anybody out, in the cold like that, just using them for that. So my next thought, which is definitely mortgage fraud, is to just have my dad write a letter of qualifying income. My father owns a small business with several employees, and it wouldn't be that much of a stretch to just have him write a letter of qualifying income and saying that he was going to hire me. This is definitely mortgage fraud, but I probably could have gotten away with it. If my dad wrote the letter and then the underwriter called my father, it's not too sketch to say that a son is getting out of the military to go work for his father's company, the family business. It's privately owned, so it's not like a publicly traded company or anything. And I had a conversation with my father about this, and to my father's credit, he immediately shot it down. He was not going to entertain that at all. So kudos to my dad for being a super ethical person. But once again, I just had to have the thought exercise, explore all my options, even if they're not legit. And yeah, I wasn't going to do that, guys. In the end, I probably wouldn't have gone for that either, because I'm just an ethical person, and no, you probably should not lie on a mortgage application. So for fun, let's just review my stats. I've got an 820 credit score. I have zero consumer debt at all, $350,000 in assets. I have proof of year-to-date income on YouTube of $67,000. I've successfully paid my rent for 20 years, and no, mortgage application denied. This guy right here, super sketch, super high risk. He cannot be trusted with a mortgage. Now, if you're still with me and you're still watching this video, then potentially you have an answer for me. And I know a lot of people are going to suggest that I just go for a portfolio loan. If I just go talk to a bank or credit union, they might still give me a loan to buy a house, but it's just not one of these conforming mortgages. They don't want to do this because the loan then stays on their books for the lifetime of the loan, 30 years, 15 years, whatever. I know it is technically still possible if I go speak to a banker and I just tell them, yeah, I'm this up-and-coming YouTube guy and look at my Google Analytics, I've got all this money coming in, will you give me a mortgage? And I just don't envision those conversations going well. Sure, I could open up a checking and a savings account with a local credit union, drop in $200,000 and then be like, you want to give me a mortgage, a portfolio loan? I don't qualify, but will you make an exception for me? It's possible, but just not likely. So in my mind, I've already mentally transitioned to the idea of renting. This probably is a good idea for numerous reasons, given how overinflated the housing market is at the moment. Additionally, I might move to Las Vegas and hate it and decide I want to move back to the Midwest, either Wisconsin, Minnesota, or maybe Illinois. Or I might move to Vegas and love it. I don't know. But it might be a benefit to get to know the local area and decide where in the city I want to buy. I need to do my taxes for 2021 and probably 2022 before I'll have enough qualifying income from YouTube to qualify for a VA loan. So potentially I could be buying a house in March of 2023 now. Once again, guys, thanks for watching. If you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions or you know something I don't, let me know in a comment down below. I love hearing from you guys. Till the next video, take care.